British American Tobacco has been beaten up substantially in 2023, down over 24% year to date. This is always going to generate a lot of interest because, of course, as stock prices go down, dividend yields go up. And tobacco companies were already known for paying some of the highest yields in the market prior to these price declines. The question is British American Tobacco worth it? Does it have potential to be a value at this price? Well, first off, tobacco is a very long-established and mature industry, okay? They've been around since 1902, so over 100 years they've been in this business. They have international exposure, so from the perspective of emerging markets, you could see some potential opportunities for growth in countries where disposable income is going up and people can afford to pick up vices and bad habits like smoking. However, in more developed Western countries, smoking is, of course, on the decline. So perhaps on balance, it evens out. However, that's not the only thing they've got. They also have the Vuse vape product, which is, according to their own statistics, the number one global vaping brand. Now, they've probably done their research, and they probably know what their own market share is, so I'll take that at face value. Certainly, whenever I go into like any kind of convenience store or whatever, I do see the Vuse products on display prominently, so certainly they are sold far and wide, and seem to be a hit with the e-cig vaping crowd. It's not my jam personally, but hey, I don't have a problem with people doing what they enjoy in their own time. So, with regards to their financials, overall, revenue has grown over time. However, 2020 and 2021 were exceptions to this, but only very slightly. And granted, when there's a pandemic that involves, let's say, an attack on the lungs from a virus, well, it's understandable why maybe smoking would take a hit. Hard to smoke when you're on a ventilator, right? So, not that some people maybe wouldn't try. Now, with regards to the dividend, because this is, I think, the thing that that draws people to the stock, I think it's important to point out the dividend doesn't just go up. This isn't like an Altria where every year you're going to get like a 3 or 4% dividend bump. The dividend goes up and down in BTI. Mainly, I think it's because their priorities for their cash flow change, and they don't want to necessarily get locked into allocating their cash in one specific way. It seems to me like they want to be able to be flexible to maybe cut the dividend a little bit when it makes sense to do other priorities, which earlier this year they actually had planned on doing share buybacks, but suspended it in order to address the next thing, which is the debt. So BTI has, now this is in pounds, okay, GBP, because this is actually a London-based, it's based in England. I think their headquarters is in London. Yep, headquarters in London. So the financials on this data feed are in pounds. So long-term debt, 38.7 billion pounds, which comes out to about 47 billion US dollars in long-term debt. So the reason why they haven't been really focused on buybacks is because they had stated they wanted to focus a little bit more on paying down that debt. As you can see, they went from 44 to 43 to 37, and then It went back up to 39, then down to 35.6, and then it started going back up again. It seems like maybe they want to get this debt situation under control with the interest rate environment the way it is right now, the way they're talking about it staying higher longer. I don't hate them focusing on the debt. However, as the price goes down, okay, we're looking at less than a 6.5 PE, okay, which brings their trailing 12-month yield up to over 9%. If it gets to the point where, for example, they're saving more percentage-wise on the dividend than what they would pay in interest to refinance some debt, I would probably rather them do buybacks when they're this cheap and, focus on the debt a little bit later after the price maybe starts to come back up a little bit. Mainly because how often does a company get an opportunity to do buybacks this cheap, especially a company that produces such high amounts of cash the way a tobacco company does? I think this is a pretty unique period for them to be able to create a lot of shareholder value in the long run if they do a significant buyback and just delete those shares. Now, with regards to future growth prospects, analysts do have EPS going up. The 2024 number looks pretty underwhelming, but then from there, it seems to get better, although fewer and fewer analysts actually are covering. So I would be curious to get more detail about why suddenly 2025 and beyond are going to be so much better for BTI compared to, say, the 23 to 24 period. Perhaps this does have to do with, since these are EPS numbers, maybe they do think, well, hey, if they focus on paying down some of this debt, maybe losing the interest payment will drive some of it. Maybe they anticipate the share buybacks coming back and that being a big driver as well. Maybe they anticipate growth in the vaping space. These are things to just, keep in mind. A lot of different things could drive that EPS, but I'm curious what the actual thinking of the analysts might be on that. Now, would I consider it a value today? Well, I have the stock, and it's at a bit of a higher cost basis today. I think I'm down a little bit on the position. Although when you factor in dividends, I think my total return is not too terrible. Because I've had some dividends and some options premium in there. So it's not like it's really dragging me down or anything. But personally, the thing I want to see, if it stays this cheap, I really, really want to see those buybacks come back. I think that would be one of the best uses of cash, because there's only so much growth that BTI can do in the underlying businesses year over year. Tobacco, smoking in general, it's going to be pretty stagnant, I think, on the whole. I don't think they're going to get a whole lot of increased sales in the cigarette space. They might be able to raise prices in some areas, get growth in some, shrinkage in others, because they are a global company. But on the whole, I just don't think that's going to be a huge driver of the bottom line for shareholders. Vaping could have some growth left in it. Some of their other products maybe. But on the whole, I think the real opportunity for them, if prices stay this low, is going to be in the buybacks. Let me know in the comments, though, what you think about BTI. If you have any tobacco stocks in your portfolio, which one is your favorite? Do you prefer Altria Group? Do you prefer Philip Morris International? Or how about something random like Imperial Brands? Personally, I have both Altria and BTI. And I think tobacco presents maybe an underrated opportunity slightly. I don't think I'm going to get, 25 or 30% a year or anything crazy on them, but I think they could give me solid low double-digit returns. That's just where I'm at with it. Also, remember, like and subscribe the video. Make sure that you join the Discord link in the description, become a member, and watch us live on Cashflow Kings. Link in the description there too. Check you later. Just another Manic Monday.